Hey there YouTube. So in this video I wanted to cover IRS Form 982. This is a form for the reduction of tax attributes due to discharge of indebtedness. Okay, so it's quite a mouthful. What does that mean? Well, generally as a U.S. taxpayer, if you have any kind of canceled debts, right? So if you have a credit card balance that you haven't been able to pay back and the credit card company basically cancels the debt, that is income to you. It's taxable income. It's arguably phantom income because you're not really receive anything at that time, but nevertheless it's still taxable income. Okay, cancellation of debts are income to you as the taxpayer. As a taxpayer, you'll get a 1099-C in the mail, right? This is an example here from a fake credit card company. John S. is the taxpayer, and so John had $2,500 of credit card debt with this company. He wasn't able to pay it back, so they canceled it. In box 4 here, they'll indicate what type of debt it was. This is credit card debts. In box 6, they have an event code. Code F in this case indicates that the lender and the borrower basically agreed to cancel this debt for a specified amount, right? So there are other codes for things like discharge and bankruptcy and so on. So John gets this in the mail, right? And again, it's a 1099, so a copy is sent to the IRS as well, right? So the IRS is going to know that you had cancellation of debt income. So generally, this is reported on your return as taxable income. If we look at a sample 1040 here, cancellation of debt income is other income, so it's going to be on line 8 here, and it's going to be reported on Schedule 1, right? So the amount is eventually going to flow through to line item 8, and it's included in your adjusted gross income and ultimately your taxable income. But of course, like everything else, there's exceptions to the rules, right? So what are some of these exceptions that we find on Form 982? Well, there's a couple here in Part 1. The one I want to focus on is a discharge of indebtedness to the extent you as a taxpayer are insolvent. So box 1B, what does that mean? Well, insolvency is basically just a measure at a certain point in time of your net worth. So if you total up all your assets, your liabilities, if the amount of your equity is negative, you're insolvent, right? So if your assets are not greater than your liabilities, right? So you got more debt than you have assets, you're insolvent. You're in a net equity position, so you're insolvent. Now you see here they have discharge of indebtedness pursuant to a Title 11 case. That's bankruptcy. That's not what's applying here, right? So you don't have to go to court to determine you're insolvent. You don't need a lawyer. You are basically just putting together your personal financial statement to determine whether or not you are insolvent. And in John's case here, he's determined that he is insolvent. His liabilities exceed his assets. So he's going to try to exclude this amount of canceled debt income from his taxable income because he's insolvent. So he checks box 1B. And then in this software package that we use, there's also a very helpful worksheet where you can compute your insolvency. So here we put this worksheet together for John. Liabilities up here, assets at the bottom, and then when it all foots to the bottom here, you're looking for, are you insolvent, right? Do you have an amount of liabilities that exceed your assets? So John's put together his financial statement here, and this is what is your financial position immediately before the debts were canceled, okay? So his credit card debt, there's $2,500 that he had. That's going to be the amount that was canceled. So he's got $2,500 in credit card debt. He's got a car here. He's got a loan outstanding on the car of $5,200. He's got some student loans, $8,000. And then he's got some past due utilities, right? He hasn't paid his electric bill in a couple months, so he owes $250. So those are his total liabilities, right? $15,950. Now, under here, we want to report his assets, right? So he's got some cash in the bank account, $1,200. This is his car, what he thinks it's worth, right? $6,500. And then he's got a computer, $1,000, right? And really nothing else here, right? It doesn't have any jewelry. Clothing, I mean, he could put something down there if it's nominal, right? I mean, I guess if you have a lot of really, really expensive clothing and some full closets, then you should put down those amounts. But when you do this worksheet, try to be as thorough as possible, right? Really try to capture all your assets and liabilities to really support the position that you're insolvent. So in John's case here, He's got $15,000 in liabilities. His assets are only $8,700. So he is insolvent to the tune of $7,250. That is his net negative equity position. Okay, so he's insolvent, so he qualifies, right? So what does he have to do? Well, if he looks at the 1099-C, this is the amount of debt that was just discharged, $2,500. And he reports that $2,500 here on line 2 as the amount that he's going to be excluding from income. Now, once you exclude this from income, you're not completely free from having to do anything else. This is where the reduction in tax attributes come in. So in part 2, what they're trying to capture here is if you have any assets remaining after the discharge of debt, you're supposed to reduce the basis in those assets as much as possible, but not below zero, right? And that's because if you go ahead and sell those assets later on, you're going to realize a greater gain from the disposition of the asset when you sell it. And so there's a couple of things that you could apply the discharge of indebtedness to reduce the basis. You're basically supposed to go in order. In John's case here, none of these first ones apply, right? He doesn't own any real property. He doesn't have net operating loss carry-forwards. Those would apply if he was a business owner and he had some NOLs carried forward. Doesn't have any business credits, right? But what he does have here is some net capital loss carryovers, right? So in the prior year, John sold some stocks, made some net capital losses, and he had a capital loss carryover of $3,000. Well, the $3,000, of course, gets carried forward year after year until it's completely used. But because he had this cancellation of debt income, he has to reduce that amount of carryover dollar for dollar, right? So what he's doing here is he's indicating, okay, I'm having $2,500 in income that's going to be exempted, so I'm going to reduce my capital loss carryover by $2,500, and then I'll have an adjusted capital loss carryover that I can use for this year. And so here you're supposed to attach a statement explaining what it was you reduced. So we've indicated here that John had a capital loss carryover of $3,000. That's what he had from the prior year rolling into this year. But because he had the discharge of indebtedness, which he's excluding from income, he's going to reduce his capital loss carryover by $2,500, and the adjusted capital loss carryover for 2020 will now be $500. And so we flip up to Schedule D here for John. Here's where he would have his capital loss carryover. So this number was $3,000, right? So he had $3,000 coming over from the prior year, but he had to reduce it by $2,500 because you have to reduce the basis in that tax attribute. So now he's got $500 remaining, and he's able to use it in the current period. So let's see, anything else I want to touch on there? No, I think that covers it. So, one more point. If you find yourself in a position where you're insolvent, and you don't have any of these attributes to reduce, that's okay. You can still exclude the income. You can still include the discharge of debt from your gross income, but you just have no tax attributes to reduce the basis of. Okay, so it's not uncommon to see all of these fields completely zero. But in this case, John did have some capital loss carryover, so we had to reduce it per the regulations. Okay, so that covers everything on Form 982. I hope that was helpful. If you have any questions, please leave me a comment below on the video. Happy to help where I can. And of course, always appreciate a like on the video. And if you can subscribe to the channel, if you aren't already, that would be great. I look forward to seeing you again soon. Thank you.